And coming back to Fed now, here minutes of US Federal Reserve Bank are out, and according to records, policymakers are worried that sky-high inflation is not going away anytime soon. They also stressed their readiness to continue raising interest rates to prevent any inflation which is going to get higher, even if that slowed down the US economy. Federal Reserve last month had implemented its most aggressive interest rate hike in nearly 30 years. Now, after consumer inflation surged to 8.6% in May, highest in 4 decades, the minutes are showing that officials were concerned that inflation pressures had yet to show signs of abating. They also made clear that officials do not plan to let up their efforts to cool economy. The group also noted that a willingness to move interest rates as high as needed to bring inflation to 2% target of Fed is possible. The rate hike last month came as soaring prices left millions of Americans struggling to make ends meet. It sent President Joe Biden's approval ratings plunging as well. The report said there remains a risk that inflation will continue to accelerate because of uncertainty surrounding Russian invasion of Ukraine and COVID-19 lockdowns in China. Inflation in US, which was already on rise due to clogged supply chains after pandemic, got dramatically worse after Russia invaded Ukraine in late February. US gasoline prices topped $5 a gallon for the first time, though they have since retreated slightly. Fed's aggressive push to curb inflation has raised fears that US is heading towards a recession, but here's an interesting observation that word recession was not mentioned once, even in the minutes. So while inflation was referenced 90 times, Wall Street ended higher yesterday after minutes were released. WION now available in your country. Download the app and get all the news on the move.